let me officially welcome everyone, and especially Dr. Brett Steenbarger. This is such an exclusive opportunity for all of us, the audience, for me, to spend the next hour answering the questions together and having you share all this wealth of experience and incredible wisdom. So I'm very excited, and I know this is going to be absolutely awesome. Okay, guys, so you should see on a pop-up on Zoom. You can enter your questions there, but also upvote the questions that are already there. So if there is a question that you say, oh, I also wanted to ask, you can like it and that will go up in the list. So we'll make sure this way that the most burning questions that most people have will be answered first. So without further ado, let me just quickly introduce myself because I see a lot of new people here. So I want to make sure that you also guys know who I am, why I am actually here. So I'm Agnieszka Wood. I'm a trading mindset coach, and just for visual people, I am quickly going to share my screen. I am originally from Poland, and at the age of 23 or 22, I emigrated to the Netherlands, and I lived there for 15 years before I came to the US. And since 2013, I live in Florida. And on a daily basis, I help traders. I trade to start with. I'm an equity trader since 2010. And since 2019, I started a head coach, an online platform providing mindset trading mindset coaching for traders. And I work with traders on a daily basis to help them develop the right mindset so that they can make decisions based on their strategy, not their emotions. And I help them build a structured approach so that they can trade with consistency, confidently, and execute their plan. So this way, I help them to transform their trading approach and setting them up for lasting success. And I do that through various modalities. So I use different methods and tools and approaches in my coaching. I leverage over 20 years of my experience as an NLP master practitioner and a trainer. I also use somatic EMDR work in my practice. I use family constellations, mind and body energy integration, and also neuroscience principles. It's a very holistic approach that I use and personalized. So that's a very short summary about me. And I would like to let Brett, would you like to kick things off?
That sounds wonderful. Thank you very much. Can you hear me okay?
Absolutely.
Thank you,
Fantastic.
Agnieszka. I appreciate it. So I'm Brett Steenbarger. I'm a psychologist. I teach at a medical school in Syracuse, New York. And for a number of years, I've worked with traders and portfolio managers at hedge funds, applying psychology to their performance, helping them improve what they do by using techniques that are research based in psychology. I've traded financial markets, particularly equities, since the late 1970s. You remember that, Agnieszka, right?
Yeah, I was just born.
Right, yeah, exactly. So I've been trading financial markets for a number of years, and I have a blog trader feed that describes some of my ideas about trading and about trading psychology. And I have a book that's coming out this year called Positive Trading Psychology, which is an application of what's called positive psychology to our trading. And what that means is figuring out what our strengths are. What are we really, really good at? And then figuring out how to leverage those strengths to become better and better and better at trading. So, thank you very much for having me, and I look forward to this.
Awesome. So we were talking about to start with a little bit of setting the tone and talking about what happened in the market this morning after the weekend. Well, on Friday, everything was setting up beautifully, and we wake up to this big drop and uncertainty. Would you like to talk about this a little bit more, Brad?
Yeah, I would be happy to. Usually, when I visit trading firms, I'll do a talk first before I meet with the traders, and the talk will be a summary of not only what's going on in markets, but what's going on with different traders in different areas. And we had two things this morning that affected the market. One, maybe the most important thing, or at least the thing that was most on people's minds, was sudden competition from China in the AI arena. And if you look at NVIDIA stock today, you'll see that it didn't respond very nicely to that competition. So we got a lot of selling early, and the selling was even more pronounced in the NASDAQ stocks, which are technology dominant. And so that really changed the tone of the market. We saw volatility go up, and we saw weakness across the board. Now, as the day moved on, the weakness was not across the board. We saw a bounce in the Dow Industrials. So even though the technology shares were weak, there were some stocks up on the day. So we stepped back from a real panic sell-off, at least for today. But the big issue here to be aware of is that during this really historic stock market rally, more and more and more and more of the value of the stock market has been found in relatively few stocks. They talk about the Magnificent Seven. So the rally has gotten narrower and narrower and narrower. Before we had this morning's decline, we did make new highs in the S&P, but look at how many sector indexes were far from their high. Certainly real estate stocks, certainly raw material stocks, that would be XLB, XLRE would be real estate. A number of sectors were not making new highs. So the breadth was getting narrower and narrower even before this catalyst of China's participation in the AI. So the big thing to look for going forward is, does this rally broaden out, or do we get narrower and narrower and narrower, which means that it's not really a bull market trend. It means that it's more of a rotational market where funds are rotating from certain areas of the market to other ones. So that's the first thing. The second thing is the news that came out that Colombia was not going to accept the people being deported from the US. And what was the president's immediate reaction? Slap on 25% tariffs. And the immediate reaction of those in Colombia was, okay, we're going to put tariffs on our products to the US. So we had the beginning hint of an actual trade war, actual retaliatory tariffs. Now, everyone backed away, and so for now, that's okay. But the genie is out of the bottle, so to speak. The Trump administration is going to use tariffs in a punitive way, and there will be room for retaliation. If we have tariffs and retaliatory tariffs, then we have the potential for rising prices in.
Hang on a second.
Okay.
I don't know what happened. Sorry.
Okay, can you hear me?
Yes.
Okay, yeah. So if we have retaliatory tariffs going forward, that will increase prices, it will decrease productivity, and it will lead to inflation, and that could affect what central banks do in their rate policy. So the fear is that we could see stagflation, lower growth, but higher prices because of retaliatory tariffs. So that's a second thing to keep on the radar that could undo the bull market.
Right. And now the question is, as a trader, right? Because that panic, especially if you're a day trader, in fact, the volatility is really very good and welcome. But the bias can damage your decisions and take you away from actually from your plan. Right.
Yes, and one of the keys here, and you make a good point, is whether this is a trending market or a rotational market. A rotational market means that money is going into certain parts of the market and away from other parts. A trending market is a rising tide that lifts all boats
Right.
or that it sinks all boats. And so far, we're seeing more selectivity. We're seeing more of a rotational market. And that's what we want to look for going forward is, does any rally broaden out? Do we stay very narrow? If we get selling, is it going to be broad selling or is it more selective as it turned out today? So those things will determine whether we get follow-up buying or follow-up selling versus this up and down rotational trade.
Right. And would you recommend in that case to sort of back off and wait and see strategy? Or would you like how can you as a trader deal with that situation at this particular moment?
There's a lot of uncertainty, and a lot of the hedge funds I work with, people are making money, losing money, making money, losing money. People are getting chopped up. It's a difficult environment, and so all you can do is identify the type of environment we are in now. For instance, if
Right.
we're in a rotational market, then you want to focus on the strongest parts of the market. And when there's a dip, you think about buying. And the weakest parts, when there's a bounce, you think about selling. But
Uh, can you guys, for me, Brett, are you still there?
from
For
one
me,
day to the next.
okay, sorry, the connection got a little bit choppy for a second. Okay. All right. Thank you for that. Are you okay if we go on with questions? Because I see a lot of questions are coming in. And guys, one thing, if you have sent a question to me, to my direct message, it will be very difficult for me to trace it because I will have to like do everything at the same time. So if you could go to the Slido, that application on the site, or at least to the chat that sends a question to everyone. So then Eva can take that and put it into the app that has all the questions, okay? Because she cannot access the private if you send me a direct message. So the first question that has also the most votes is actually very short and simple. How do I stay in a trade? And that is a question, of course, on both sides, right? How do I stay in a trade when it's profitable? And how do I keep myself and not scare myself out, basically, regardless of what it's doing? Because sometimes the price might go in a different direction than you expected, but still within your plan. So how do I stay in a trade? How shall we approach that?
Okay, you want to have at it first, Agnieszka, and then we'll
Sure,
have to
sure.
respond.
Yeah. I always like to look at, and I say, I have a lot. I don't have all the answers, but I have darn good questions, because the first thing that comes into my mind is, first ask yourself, how do you talk yourself out of it to start with? Because if you are in a trade and whatever you say to yourself, and that's part of that programming, what is it that what story are you telling yourself when you are in a trade that makes you get out of it? How do you scare yourself out? Like if you, and one thing that I hear a lot of times is that when you have a plan and then you enter the trade, that the moment that the price turn in the opposite direction than you expected, or in the direction you hope it's going to, people say to themselves a lot of times, it's going against me. Oh, the trade is going against me. And that is sort of triggering a natural reaction of, oh, it's against me, I need to fight. Because if something is against you, you have to defend yourself, right? So it's automatically sort of negative. So if you can become aware of your internal dialogue, what is exactly happening on the inside when you are in the trade, and you know, okay, this is exactly the way how I talk myself out. The same way when you are, before you enter the trade, a lot of times you would say to yourself, yep, it's going to break out. Yeah, it's going to work. I'm like, yeah, no wonder that you are jumping into a trade without confirmation. If I convince myself that something is going to work for sure, I would be silly not to enter, right? Because it's going to work. So a lot of times, it's like self-fulfilling prophecy. If you convince yourself something is not going to work, you're going to scare yourself out and get out probably before your target is going to even reach it. What's your take on it, Brett?
Well, I'll give an analogy. How do I stay in a relationship? Now, I happen to be an expert in this area because I've been married for over 40 years.
Oh, wow.
But how do you stay in a relationship? Well, you stay in a relationship by recognizing what are normal ups and downs that any relationship has, and what is a more fundamental problem that could threaten a relationship. And so when we are in a trade, we want to anticipate, quote unquote, the normal ups and downs.
Right.
But we also have to have criteria that say, if I'm long and I expect this to go up, it really shouldn't go below this point. I have some point where that it's no longer an uptrend. I need to get out. That shouldn't happen, just like would happen in a bad relationship. So by having those criteria laid out up front, we can make decisions rationally rather than reactively and emotionally.
I love this. I love this because this is basically sort of know thyself, but also know your strategy, know your setup. Like if you know what you can expect from your setup, like for example, okay, my setup 90 or 80% of the times is going to retest my entry price. So now if I know that, I can decide whether I want to take a partial profit at some point, or am I going to wait? Like when am I going to adjust my stop? Is it after the retest? Obviously, because otherwise I'm going to get stopped out for nothing. And if I really know what to expect, it is just so much easier to stay calm and poised. Such a good point. I love the analogy of relationship. The second question we had, so this one had actually the most people asking. Now we have another one. I have been consistently that disappeared, just got something got upvoted, we switch. How do I stick to my plan and not move my stop or take profits too quickly? My losses end up being big and my profits too small. I have seen that question about moving stop loss too quickly so many times. I'll give you a go ahead at this.
Yeah. How do I stick to my plan? What's happening, obviously, is that the ups and downs of positions are distracting you and taking away from your focus and making it harder to stick to the plan. In the training programs that I participate in, particularly some of you are familiar with SMB, you start out by taking trades and not having any risk on. You're not, they're a paper trade or very small trades so that you can get into the habit of following your signals, following your plan. What happens is people are too quick to size up positions. They're not ready emotionally to deal with the ups and downs of their P&L, and that disrupts their sticking to a plan. By starting literally in paper trading mode, getting accustomed to trading signals, trading ideas, and gradually, slowly bumping up size, then we build the right habits.
Yeah, so it's actually building the resilience, right? Because a lot of times the reason why people move their stop is because there is this narrative, I don't want to lose. And that also goes back to the moment before you even take a trade. I like to compare it to casino, right? That when you go to a casino, you can play, but you have to pay first. And everyone accepts it, even though most people know I'm going to lose that money and they're okay with it. So you have this acceptance of, if I want to play, I have to pay, right? And the chances I'll lose it. Now in trading, it's a little bit different because they allow you to play before you pay. And that kind of creates a situation where you don't fully have to accept the risk and you build in that hope that you might not have to pay. So when the trade doesn't work out and the time comes to pay, you're like, yeah, but I didn't really want to take this trade. I wasn't actually sure. I actually don't want to pay. And that's where you start moving the stop because the fear kicks in, I am going to lose money. So, and that's how you cut yourself short. And I love what you said, Brett, about slowly building that routine because that built resilience. And it's like with everything, if you start lifting weights, you also don't go for a more heavy, like heaviest weight, right? It's slowly building that resilience and strength. And that's the same with taking losses. I mean, let's be honest, nobody likes taking losses, right? Everyone would love to make money only. But then on the other hand, this is the price of trading. You have to pay. There is a cost of the opportunity that a lot of people forget, I think, in trading. The opportunity cost. Good. Thank you for that, Brett. Let's see. So we got this one. What is the best way? It's kind of, yes, it's actually a similar. What is the best way to mitigate fear, to eliminate moving protected stops, chasing trades, revenge trading, and placing trailing stops too close to price? What is your take on fear, Brett? Because this is a very wide question, but it's really about fear.
You know, I've worked with a number of successful traders. A few of them have been in the Market Wizards books, and the best of them don't have a win rate much above 50%. In other words, they lose on a number of their trades, a large number of their trades. So the way they mitigate fear is by embracing loss. They realize that there's uncertainty in the market. They have an idea. They believe the idea should work out. But if it doesn't work out, that's going to be information. And many times that information can lead to a new trade idea. So even the loss ends up helping their trading because it's information. The key is in trade sizing. So the principle that I've written about is never lose so much money in the morning that you can't come back and be profitable in the afternoon. Never lose so much money in the day that you can't come back and be profitable in the week. Never lose so much on the week that you can't come back and be profitable on the month. By keeping losses tight and defined, they become known and they become less threatening. We
So it,
want to look at losses as information. And
Mhm.
again, the best way of practicing that is by starting out trading with very, very, very small size. And then, there's not much fear because you can't lose very much. And you can get in the habit of learning from the losses. And then you gradually build a size from there.
Right. So it is really getting into that habit of making mistakes and being okay with the mistakes. Because when you take a loss, a lot of times people think that they did something wrong when they take a loss, right? But that's not the case in trading. It's information. As you say, loss is information, and it's only a loss if you don't learn from that information after taking the loss, right?
Yep.
Um, Hi, Greg. I ask everyone to switch off the camera so we just have a pure, clean recording. But welcome, thank you for being here. Okay. Yeah. What is the best mindset practice technique to prepare for entering a trading session to have the best results? Wow, that's a big question.
You want
Yeah,
to go first? You want to go first?
sure. Um, I think what I like to recommend is, you can have different routines, right? But what you really want to have is to have sort of a neutral mindset, and so that you are not bringing anything from the past, from like previous day or previous losses, but you also not too much into the future where you're thinking, oh my God, I have to make this money because this is what I'm going to do with that money. You already sort of spend it before you even made it. So there are different type of routines that will bring you into the present moment, because you have to be very present in order to focus and be concentrated on what you are trading, because there is a lot of noise in your head anyway that will be trying to pull you away from everything that you are actually trying to accomplish here. So this could be mindfulness, meditations. This could be like, even sometimes, if you do yoga or some sort of sport, if you run or go for a walk, that can bring you right back here in your mind, so that your head is sort of reset from everything outside of what you're trying to accomplish and your plan. And on top of that, what is important, and that's even more important during trading, is that you pick a few emotional regulation techniques where you work on your nervous system, so that you keep regulating your nervous system while you are trading. And breathing is a great regulation system. And you will notice that probably when you're getting stressed or you're in a trade and the fear kicks in, that your breathing is somewhere up here and your heartbeat is much faster. Maybe your hands are sweaty and you're like, oh my God, what's happening? But then from the bodily perspective, just by taking more deeper breaths and grounding, you can start appeasing your nervous system and bring that more into balance, so that you can actually be present again and focus on what you're doing. It's just like a very simple techniques. Journaling. I love journaling, and journaling is another one. Making sure that you know what is your intention for the day and what is your expectation. And sometimes you might think that these are the same, but they're not. And when you start really thinking about it, what is it that I'm expecting? How am I expecting myself to behave during trading? But what is my intention? And once you start journaling that before and really clearly state, okay, this is what I want, how I want to feel after this trading day, and this is what I need to do and focus on during the trading day, that might help you to get your results better. How about you, Brett? What do you recommend to people?
Well, the best mindset is not a positive mindset. It's not a negative mindset. It's a focused mindset. And so we want to get ourselves in a very focused state, because that is how we will best process information as markets start to move. As I've written on the Trader Feed blog, one way of working on that focus is through what is called biofeedback. So there are devices that in real time measure our brain waves, for instance, and can tell us whether our brain waves are in a more focused mode or in a more activated or anxious mode. And we can practice techniques for keeping ourselves focused, keeping ourselves calm, and through the feedback, the real-time biofeedback, we can train ourselves to be in the zone.
Right.
The the device I've used is called Muse, M-U-S-E, and you can look that up online. But there are many. There are heart rate variability products that measure the stress level in your heartbeats. But that real-time feedback trains you to stay focused.
Yes, it's actually some of my students have used the Muse,
Mhm.
indeed.
That's
Yeah,
great.
I mean, it's very it's so good to actually use those tools and not just hear about them, because um, a lot of times we think we are okay, we talk ourselves into being okay, but our brain thinks about it differently, right? And that can be different reasons. Maybe you didn't sleep very well, maybe you're tired from the previous day, or you simply, you know, you have had already a morning because you were ruminating about the losses from previous day. So it's good to have that external point of reference that will actually tell you where you are on a scale, right? How are you using Muse yourself as well?
Yeah, I do have a Muse unit. Yes.
That's awesome. That's awesome. Okay, we got another one here. I have been consistently profitable for almost a year, but now I struggle with increasing size. How can I overcome this mental hurdle? That's a good one. I'm gonna let you talk about it because we were talking about size. So let's do this one.
Yeah. So at the hedge funds where I work, when someone is successful, they are given a greater capital allocation. They're given more capital to trade and they can take more risk. But the best traders, the best portfolio managers absorb that new risk gradually, slowly. So the principle is you want to bump up your size by a fixed fraction, get comfortable and profitable at that next size, and then bump it up again. Get comfortable, get profitable, bump it up again. And so you do it in a stair step fashion so that taking more risk never feels very different. What happens is people try to double their risk taking. They try to trade very large positions and they're not ready emotionally for the P&L swings, and that throws off their trading.
Right, because it could be also because of the expectations, right? The consistency seems to be like the biggest hurdle. And I think a lot of traders think like, okay, once I'm consistent, then I'm gonna make a lot of money, right? Because then I'm immediately gonna scale. But it is a journey, always. There is not, there's like, it's always small steps. And especially when you are at the final stage, and I work with a lot of traders who are funded traders, funded accounts, and that last bit just before they can get funded, that's like the hardest, right? Because it's like I'm so close, and the urge is to take that big step, and like, okay, and now I'm just going to size up, which means I will pass that milestone in one go, and that's where things go wrong.
So,
Small
an
step.
analogy I would use is, how do we increase our size in the gym when we're lifting weights? Well, I'm lifting 50 pounds now, so I'm doing really well. I'm going to go for 200. That's not going to end well. So the idea is you bump it up gradually, get successful, do your 3 sets of 10 reps, then you bump it up the next and bump it up the next. And eventually you get to be big by,
Right.
but not by getting big, by getting gradually bigger.
Right. And that's also more healthy in a sense, like not just physically healthy, but also mentally healthy, because you do not put so much stress, emotional stress on yourself. Because every time you are in a trade, it is somewhat stressful because there is money at risk. So when you are increasing your risk, you're also using more mental capital. So the moment that you increase it much bigger, your body has to endure more stress. And we all know stress is not healthy. So smaller amount of stress, building that resilience slowly is much better for your overall well-being as a trader, especially if you want to do this long term. You really have to think about the bigger picture and not just getting there quick. Because like we know, in a gym, you also can get big quick, but that's not going to last. And your body is not going to like it either. What are your best nervous system grounding presence practices? We kind of touched upon that a little bit. Do you have any other like nervous system and grounding presence practices that you maybe have is part of your routine, right?
I'll mention a general principle that I've talked about before, and that is the best grounding that I have as a trader is to have many things in my life that are more important to me than trading.
So
And and so, I have a wife, I have 5 kids, I have 6 grandkids, I have a spiritual life, I have personal interests. So life becomes diversified. Think of life as a portfolio. And so if one area doesn't go well, there are other areas that can go well. When I have a diversified life, inevitably there'll be drawdowns in trading. I'll lose some money, but there's so many other things that are going well, it grounds me. If trading is everything, and you hear about people talking about how they have a passion for trading, and that makes us vulnerable. If trading's everything, then how we feel about ourselves will rise and fall with our P&L.
yeah, it's very much connected to self-worth, unfortunately. And trading for a living is very different than living for trading, right?
Right.
And from my own experience, I know that I have attempted to do it too, and I have only been trading, and especially in the time that it didn't really go well, it really sort of killed me. I always saying like it just killed my spirit, literally. And then nothing in life looked colorful, So I so relate to what you're saying. It's like having the complete life, basically. And I think in our actually podcast conversation we had on my podcast, you said that you cannot be wealthy in trading if your life is not wealthy already, and it's not the money that makes it wealthy, it's the value in general in life that you get from all kinds of things. So I really love that when you said it's like you cannot get rich in trading if your life is not rich already, because
Right.
that's so
Right.
true. Yeah, and for other, like if you want some kind of like practical, like really practices, I think meditation is one of the ways that I personally use to ground myself. And it can be, done not just in the morning, it can be done any time of the day. Like if something doesn't really go the way that make me feel right, I would go and meditate for half an hour just to clear my mind, just to sort of get back to center into my body, focus on my breathing. And, meditation is always kind of a discussable topic because people are like, yeah, but I'm not so zen to meditate. I'm like, you don't have to be. It's you don't have to be yogi or whatever, like spiritual. although everyone is spiritual being, but it's really for centering your mind. And as a trader, like meditation is one of the tools to make sure that you have control over your mind, that you can direct your thoughts with intention. And how do you practice it? With meditation, because that's the moment where you sit still, you don't do anything else, and then you can finally notice your thoughts going back and forth and what is happening there, right? And then intentionally let them go. So that is one of the best techniques that I have personally I use, that helps me to really ground myself and practice the presence. Okay, let's examine about stop loss. It's a hot question, the stop loss. I'm disciplined in many areas of my life. Why can't I quit moving my stop loss when price goes against me? Why do I feel the need to recover from a loss? We talked about the stop loss already, so let's maybe pick up the second part of the question about the need to make the losses back, because I personally find this really very fascinating topic, so to say, that need of, because, you know, a lot of traders have lost a lot of money in the past, right? How do you disconnect from that? What's your take on it? I'm sure you deal with this on a
Oh,
daily basis.
yes. Well, if having a loss makes me feel like being a loser, well, then of course I'm going to have trouble recovering from it. And so what's happening is I'm defining losing money um, as being a loser, as a really negative thing. There is a book out, Best Loser Wins.
Oh yeah, it's so good.
Yeah.
Such a good book.
And and the idea of that book for trading is that success is based on learning how to lose. It's not winning all the time. It's learning how to lose constructively. If I research a trade, if I've really done my homework and it hits my stop, it's wrong. There's something in the market I haven't taken into account. There's something I can learn about that will help me frame the next trade. So even though I lost some money in a planned way with that trade, I've gained information, and that can help me make money down the road. So now all of a sudden, losing becomes a learning experience, and it's not being a loser.
Right. So that's identification and gaining, again, getting that self-worth from the result of the trading, right? Because if you feel like I'm a loser, that says something about me as a human being, right? And then I want to erase that to feel better about myself.
Yes, and I think there's a book, Tom Hogard, Best
Yeah,
Loser Wins.
right. Yes,
And the
it's
idea
really
there
good.
is, again, success is based on how well you lose, which really means everyone has a finite hit ratio. Everyone has losing trades. What do you do with those losses? How do you learn from them? How do you benefit from them? The best loser wins. So you want to figure out how this loss can make me better. What can I learn from it? Both about the market and maybe also about myself.
Right. You know, I think at least that's from my own experience and from what, you know, my work with other traders, I think a lot of that feeling comes from the fact that we really never have learned how to lose, and that in generally making mistakes is wrong. And I know that a lot of people who get into trading, they're very ambitious, because otherwise they wouldn't attempt something like that. And many of them have this dose of perfectionism, right? And that drive to be perfect is driving that urge to, like, I have to erase what I did wrong, and stimulates that, like, I have to prove I was right, because I should not be making mistakes. So there is this dynamic and that internal fight of like, I cannot let myself lose because it would mean that I'm not perfect and that I made a mistake and I'm not supposed to make mistakes. And it can be a really strong emotional fight inside. And if you're not, don't realize that this is what's playing in the background, you're fighting that inner conflict with yourself. And that kind of gives you that, going back to your self-worth. What am I worth? I'm not worthy if I'm not perfect. I don't know if you have ever dealt with that, but I have personally.
Exactly. Very good. There's some very good questions here.
Yeah. So how do you change your mindset from feeling FOMO when taking vacation, or if you miss a big opportunity? How do you do that, Brett? I assume you take
Yeah,
vacations.
right. So at one firm where I work, the smallest capital allocation, the smallest portfolio, the smallest amount of money traded is 200 million. That's the smallest. So when people take vacations, they have to take vacation. They can't just shut everything down. They have a responsibility to investors. And so what they will do is create a schedule. They might take their risk down, and then they will create a schedule where they follow the market just during the early morning hours, make sure that everything's going well, make sure they make adjustments, and that frees them up for the rest of the day to enjoy their vacation. And that segmenting of time can work very well. Now, inevitably, if we are involved in vacation activities, yes, the markets could move a whole lot, while we're sleeping or while we're having fun. And again, the rule here is to use these experiences as learning. So the market moved overnight. I was sleeping. What does that tell me about the market? What does that tell me about trend, about momentum? How might that impact today's trading? So again, you're constantly in that mode of let's learn from it, let's learn from it, let's learn from it, rather than beat ourselves up over having missed something.
So what I hear you say is really very structural approach to trading rather than projecting on yourself and then taking things personally. Just always learning and staying alert and taking things outside of yourself, not making it personal.
And I have portfolio managers I work with who trade during their vacations, and they uh, don't really get away from the screens. And they very often wind up with troubled marriages. And so the time away from the screen, yes, it could miss a move in the market, but it's also an investment in the quality of your relationships, your health, and so forth. And that itself is not a bad trade.
Yeah, like from the perspective of freedom, and I totally understand it, like when you have 200 million portfolio, right, and you're a professional trader, but from the retail perspective, as a retail trader, many people get into trading because of the freedom, right? They want to have the freedom. But then what happens is that you're getting so like attached to the market that you want to get every single opportunity that's there. The problem is the market never sleeps, but you need to. And the question is like, how are you picturing your life as a trader? Is it spending your full day in front of the computers, or were you actually picturing it in a different way? Because yes, if this is what you wanted to do, fine. But most people who come to me and say, I want to get out of my 9 to 5 job because I don't want to be in front of the computer the whole day. So I'm thinking, if you want to make trading work for you, don't make yourself dependent on the market, because it's nothing that's not different than having a job and being dependent on someone else paying your bill, right? The market gives you so much opportunities to actually get your own routine, your own rhythm. There's so many instruments you can trade, so many different strategies that you can actually pick and choose. Like, how do I want to make my structure and make my routine and make my system work for me? So I like to say, yes, I can take my computer when I go on vacation. Like people say, trade and travel, but I trade so that I don't have to trade when I travel.
Right.
And I actually, it's funny because my last vacation that I went on, I took my laptop and I was holding it with me. I was taking it with me from, place to place, but it was always in a safe. I never even opened it. And it was like, this is the last time that I even took it with me. Because that's like, it was more like a safety net. You know what I mean? It's like, okay, like a blanket. I'm going to hold on to it just in case. But it's up to us that in case, because you can just make a decision. Okay, I am going to trade today, or I'm not going to trade today, or on my vacation. And when you come back, the market is still there. It's different when you have positions, when you're a swing trader. But for a day trader, completely different story, right?
If I could jump ahead, Dave Deming has a question saying, I watch a lot of the SMB videos. What are the common traits, characteristics of shark ice lance that make them exceptional traders? So Dave obviously knows that I have worked with SMB for a number of years and know these successful traders. One of the common traits, characteristics is that they trade and they review their trades. They discuss their trades in teams. Every one of them is a member of a team. And so think of it as getting so many more reps when you are trading, studying the trade, discussing the trade, um, learning about other people's trades. That just gives them an accelerated learning curve and has helped them be successful.
Yeah, that's awesome. Reps, right? Yeah, and also like, because they work in a team, it's so valuable to hear someone else's thoughts about your trades, right? So that you are not getting stuck in the tunnel because people see things differently.
Yep. And I'll mention one other thing really quickly. So, one of the problems that traders have is that they focus on trading problems.
Mm,
They don't focus on what they do well. They don't focus on their successes. And that's one reason I have written this new book, The Positive Trading Psychology, because just correcting weaknesses is not going to make us great. We have to figure out what we do well and then figure out how to bring that to trading. And so we want to really study and focus on our winning trades. What are we doing when we're successful? What are our best practices? And grow those rather than only focus on how can I deal with this weakness? How can I deal with that weakness? What makes us special? What do we do really well? How can we bring that to trading? How can we expand that?
that's fantastic. Yes, the strengths are bringing us much further than the weaknesses. And yeah, unfortunately, we often are too much focused on the losing part, right? Is there, we have 4 minutes left, right? So since you can see the questions as well, is there any other question that you say, okay, this one, let's take this one. There's one that has 4 votes. How important is edge versus psychology? My bias is to focus all my effort building on my existing trading edge instead of trading psychology. Is this bias wrong? That's an interesting question.
I missed that question. Maybe.
It's the very first one on top. It's how important is edge versus psychology. My bias is to focus all my effort building on my existing trading edge instead of trading psychology. Is this bias wrong?
Absolutely not, Gil. Absolutely not. If we have a great psychology and no edge, then we'll be very happy and in a good mood when we lose money. So the focus has to be on building your trading edge, and I would say edges, finding different things that we're good at. And in building our strengths, we are building our trading psychology. Now, when we make mistakes, we can correct those mistakes. When we get caught up in trades, we can learn from that. But for a developing trader, working on your edge, honing your edge, studying your winning trades, that is the most important thing, and that will help build a positive psychology.
Would you say that psychology is in fact part of your edge, right? Because if you have the strategy and you have your edge, but you cannot consistently execute it, then in fact you don't have a strong edge. You have a strategy, but you cannot execute it, right? So it's not really the either or.
Right, exactly. And what I have found is that when traders work on their trading and refine their trading and get better at their trading, that does build their confidence, that does build their psychology.
Right.
Someone asked, what are the top obstacles you've seen with your clientele when becoming a full-time trader, and what advice do you give? So when you're an independent trader, if you're doing it full time and you aren't making money, ouch, you don't necessarily have other money coming in. And that puts on a lot of stress. And that puts on a lot of pressure to bump up the trading size too quickly because you need to make the money. At a hedge fund, there's a salary. And if you have a six-figure salary, well, it may not take you very far if you're living in London or New York City, but it basically pays the bills. So you don't need to be making money all the time, all the time, all the time. And that takes a lot of pressure off. So the top obstacle I've seen with people becoming a full-time trader is that they don't have enough money in reserve. They don't have enough savings to survive their learning curves.
Yeah, so do not give up your job until you have enough reserves to actually be able to cover your expenses and not adding that extra pressure when you want to day trade.
I first learned trading while I was teaching at the medical school in Syracuse. And so what I did was I just blocked out some morning time, and that's why I did my trading. And I became good at reading the market during those morning hours. And then I worked during the day. But I never had a particular pressure to make money because I had my regular income and I was able to gradually practice the trading. And that worked out quite well.
Yeah, desperation is never a good advisor, and not in trading, in life in
Right.
general. Alex is asking, what do you think about the role of technology and especially of AI in trading psychology now and in the future? It's a very interesting question. A little bit of background. Alex is actually from organization. I hope, Alex, you don't mind. I'm introducing you here. Tradefulness, and a conference that will be actually first trading psychology conference taking place next week. So Alex is working on an app that's helping traders with trading psychology. So I think that's the background of the question. I'm really curious, Brett, what do you think about the role of AI?
Yes. What I would say definitely is that technology and AI help us process more information and help us process information better. And so by having those tools, we're able to perceive opportunities that otherwise we would not notice. That creates an opportunity mindset, and that helps our psychology. So it's not necessarily the case that we're using AI as our therapist. Rather, we're using it as a tool to process information better, see more opportunities, and that helps keep us in the right mindset for making money.
Do you think that there's a lot of a lot of issues from what keeps us distracted is the overwhelm of information?
That is one of the things, yes, that we focus on too many things, which means we're not focused. We're really trying to process too many things. We get distracted very easily. And we also have trouble sometimes focusing on the right things.
Right.
And so potentially these the tools of technology would help us focus on the right things.
But we are 3 times over time. I don't want to take so much more of your time. We have still a lot of questions. I think this is like very, really, really great and so many good questions. I wish we had a few more hours, but we don't.
One last thing. Figure out what you're doing when you make money. I hear you, I hear you, I hear you. What can I do when I'm losing? What can I do when, FOMO? What are you doing when you make money? Study what you are doing in your best trades and create a model of you at your best. And that can guide your development going forward. Many times, out of frustration, we focus on what we're not doing well and we miss what are called our best practices.
This is so great. And it goes so in line, Brett. This is fantastic because this goes so in line with also focus on what you want instead of what you don't want, because where your attention goes, that's where your energy flows, and that's what you will materialize. So if you constantly think about, oh, I don't want to lose, I don't want to lose, when you're trading, this is how you will be making your decisions not to lose. And that's where you will be moving your stops, you're cutting yourself short, not following your plan. So focus on, like Brett said, on what you're doing good, but also focus on what you want as opposed to what you're trying to avoid.
And I'll just add one little piece to this, and then I'll STF
So
you.
much inspiration.
That's a technical acronym. At some points, at some times, you are already the trader you want to become.
Right.
Not all the time, not even most of the time, but on occasion, at times, you do things really well. Study your successes, study what you do when you're successful in your personal life, when you're successful in your trading, and do more of what works. That's called solution focused work, and it builds our strengths rather than keeps us focused on weaknesses.
Oh, good. Brett, I am so happy that you are here, and thank you so much for your time and all your wisdom and knowledge you've shared. The books, by the way, that you have mentioned, guys, I hope you have noted down because they are absolutely fantastic and they will help you so much. If not, watch the recording. I'm going to post it right after, as soon as it's getting processed.
Thank you, Anashka. I appreciate it, and look forward to doing this again.
Awesome. Oh my God, that will be wonderful. I will keep you all guys posted when that would be, and we'll keep in touch.